Hi, everyone. This is Paul Fouché, Chief Investment Officer at New Road Capital, giving you your April market update. So as suspected, and something I discussed in March, is that we thought that equity markets, sold off in March quite quickly, and we thought that they would recover quite quickly, in April, and that has been the case. So we were buying offshore equities. We were upweighting offshore equities through the end of March and into the dip, and really have sort of ridden that recovery out quite nicely. So fund performance in April is really strong, been really good, and that's on the back of the recovery that you saw, particularly across equity markets, but particularly in those offshore equity markets. So, we thought they would be similar to Russia. So, when Russia invaded Ukraine, similar story. You saw sort of a global shock to energy supply. But then you saw a normalizing and a kind of, the beautiful thing about the free market is it tends to adjust and it makes adjustments. And that's essentially where we think you'll see the oil price in the next few months. We think that you'll see a protracted spike, but we think the worst is behind us. And we think that you'll see that oil price to start to come down from here as supply chains sort of adapt globally. Same thing happened in Russia, so oil price spiked. And if you think about it, before this Iran story, oil was sitting, in the $50 a barrel range. And, the Russia-Ukraine story has not solved itself yet. Nothing's changed in terms of what's actually going on in the ground there. But what did change was global supply chains adjusted and adapted. And we think that you'll see the same going forward with Iran. So, quite bullish. We think the market has also seen through that. And that's why you've seen a big increase in equity markets. So notwithstanding the oil price is still high, you'll probably see some economic pain and some headwinds there. But ultimately, as investors, we've got to look through that, and we've got to look at where the opportunities are. And we still see very abundant opportunities and something that the portfolios have taken advantage of. So, another thing, earnings, a lot of the big tech earnings came out this month and pretty much across the board beat estimates again. So just looking really healthy. The parts of the market that we're exposed to still looking good and still have very strong underlying fundamentals. And, what's happening in Iran has not changed our medium to long-term outlook at all. So, we're looking through the noise and just making sure that as professional investors that we're able to manage the portfolios as efficiently as we can. And that's what you saw through April. So really, really proud of April, really, really encouraged by the performance numbers that we had, and continue to be quite bullish going forward as well. If you look at valuations still looking fairly good across the board. The big thing, obviously, in the US, they had an inflation number that came out. So their headline inflation number jumped from around 2.4% up to 3.3%. So it looks on the face of it a big jump. But remember, that's because of the oil price coming through. So those, that's a step up change in inflation, and it's not a long-term inflationary trend. And we probably see with oil coming down, you'll probably see that being more deflationary with those base effects coming through in the medium term. So yes, on the face of it, looks like a spike, but long term still, we still, our thesis around inflation hasn't changed. We still think on the long term, you're going to see sort of very low inflation. Just, economically speaking, there's just not a lot of inflationary forces other than the oil price right now, which we know is caused by a temporary externality. Food and energy prices also obviously came up a bit, and that's just because of obviously oil, sitting at north of 100, so ended the month at $104 a barrel. But as I say, we think that you'll start to see coming down over time, notwithstanding the noise you're going to see in the media, but we're looking through that. And then food prices, obviously, on the back of that also coming up. Wheat, bushel of wheat now sitting at just short of $7, whereas, before it was sitting at about $5.50. But again, based on the oil price. South African inflation still very much under control. Inflation sort of headline inflation sitting at about 3.1%. That is expected to go up in the short term because of the increases in the fuel price. But again, we ultimately think that that's a spike and that will come down fairly rapidly as well. As supply chains adapt, and even if you don't see a sort of change in the situation in Iran in the short term, we just think supply chains will adapt. Just maybe a side thing on that is the UAE has actually pulled out of OPEC now, which is actually a good thing because now essentially it becomes a competitor with OPEC. And OPEC really, if you think about it, is one of the only sort of legal price fixing syndicates in the world at the moment, as they obviously try to fix the price of oil through controlling supply. But with the UAE pulling out of that now, it actually becomes a competition. And ultimately, that will also be good for the oil price. The more competition you have, the more people competing on a price on on a supply level and competing for market share means that that's also good for oil. So just a sort of side note as well to note that. The exchange rate, so rand strengthening quite nicely to the dollar in the middle of the month, and then it's kind of giving up a little bit, but still over the month, with a risk on trade like that, you would expect to see the rand strength. So strengthen from just below 17 to about 16.67 a dollar. But notwithstanding that, the US assets that we hold just did, as I said, around about 10% for the month. So in rand, still a very good return and lifting up our funds quite nicely. SA bonds to US bonds still looking at a good spread. You saw SA bonds selling off a bit in March, but they've recovered very nicely in April, up about 3.3% for the month. So again, we've been liking those bonds. They did sell off, but we thought, as they sell off, you get a better opportunity on the yield, and we thought to take advantage of that. So we still own long duration on the bonds, and offering us just a great return in April as well. With that all be doing just short of 3.3%. Yield curve still looking very attractive. You're still getting north of 9.5% on the long end of our bond market, which is a great it's just a great yield to get. And we do still think, as we think inflation over time is actually probably going to come down, we think you'll get a capital kick on those bonds as well. So still happy to own South African bonds. If you look at offshore bonds, the G7, that's your biggest 7 economies, up about 77 basis points for the month, and then US bonds down about 90 basis points for the month. We do own US bonds, if anyone knows, in our portfolio, but they're really there for a hedge. So, our US Treasury is really offsetting the bonds, and that's why you saw the big move in our funds, the big positive move in our funds this month. So, all in all, a lot happening. You saw a big negative month in March, a big positive month in April. But as we suspected, you would see that sell off after what we foresaw to be an overreaction in the markets. A lot going on. Obviously, we're making sure that we continue to look at the markets, but overall, we're still very happy. Long term, we're still very bullish. We think the underlying economics are looking good. Earnings coming out really good in the tech space, which we like. So yeah, our thesis long term has not changed. If anything, we just took advantage of the short term sell off, and that's something we should do as professional investors. Again, got to look through the noise, got to look through the rhetoric, and actually look at what's happening on the ground. But as always, if you need anything, please don't hesitate to contact me or the team. Otherwise, I will chat to you in early June for your May market update. Thanks and all the best. Bye.